Today I'm going to show you how to use the one candle trading strategy that people used to call the candle range theory, the CRT, to catch this trade that you are seeing right here. This is a GBP USD trade. It was successful. It is very, very simple and it's easy. We use only one candle to catch this trade, and I'm going to show you how to do it. So before then, you need to know the principle behind the one candle trading strategy before we go to the live example. What is the principle behind it? Okay, so now let's look at this place. Anytime you take one bullish candle, this is a bullish candle and this is a bearish candle. Okay, for one bullish candle, we have the open down here and we have the close at the top, because for a bullish candle, price push from low to the high. Okay, price push from down to the upside. That is for a bullish candle. Okay, and for a bearish candle, price opens at the high here and push to the downside and close. For a bearish candle, price opens at the top here, push to the downside and close down below here. Okay, that is how a bearish candle closes. That is how a bearish candle opens and closes. All right, put this in your head. We're gonna be applying this principle. All right, so for bullish candle, we have the high here, we have the low here. The same way for a bearish candle, we have the high here, we have the low here. Okay, for a bullish candle, we have the open here, we have the close here, because it is going up, it is bullish. And for a bearish candle, we have the open here, we have the close here, because it is going down, it is bearish. Any moment a bullish candle opens, all right, price will just open and consolidate like this before a push to the downside. This consolidation normally happens during the Asian time. That is what we have here, the accumulation. All right, so during the Asian time, that is where you're gonna see this accumulation right here. Okay, this usually happens in the Asian time. All right, so in the Asian time, you're gonna be seeing this accumulation in the market, and then price will manipulate. That is the wick right here. Okay, price will manipulate to the downside, and during the landing or the New York, price will actually push to the upside. That is what we call the distribution. All right, so the distribution happens mostly during the New York and the landing session. All right, that is for a bullish trade. So for a bullish move, we're looking to take for a buy trade. So someone will ask, with this candle, which zone are we going to trade? We're going to trade this zone. This is the zone that we're going to trade for a all right, so for a bullish candle, this is the zone that we're going to trade. That is the distribution zone. All right, so this is the accumulation, this is the manipulation, and this is the distribution. All right, and distribution normally happens during the landing and also the New York time. Okay, that is where the distribution normally happens. So I hope you understand the bullish candle. The bullish candle, this is the zone that we trade. This is the zone that we trade. We try and trade the manipulation. We catch the trade from the manipulation, and now we milk the distribution and we make money from there. Okay, so now let's come to the bearish move. The bearish move, we all know that for a bearish market, price opens at the top, close down below here. Okay, so anytime there's a market open, price will actually accumulate during the Asian time. That's what we call accumulation, and then manipulate to the upside. That is the wick that you are seeing right here. And a wick means price push there, and we trade from there. All right, so price will manipulate during the landing session, and then during the New York, we have the distribution to the downside. That is it for a bearish move. All right, so for a bearish move also, we look to trade this zone. This is the zone that we look to trade for a bearish move. All right, so we try and catch the trade when the manipulation has happened, and then we tap into the zone. We look for a change of character inside that zone. That is the manipulation zone, somewhere around here. Then we tap in and catch our trade from there. Scalp the candle, whatever we want to get, we scalp that candle, or we day trade that candle to where we want to day trade it to. The same way applies to this principle. Catch the buy from here, somewhere around here, and then we try to milk the market to the direction where it wants to go. All right, so I hope you understand the bearish and the bullish candle. All right, so let's apply the principle here and let's see how it works. We have the pair of gold pushing to the upside, and now we are seeing price is bullish. Okay, looking at the action of price pushing to the upside, breaking this. As you can see, there's a break of structure around here. So when they change the character around here, you have a break of structure around here. Price is continuing pushing to the upside, so we are in a strong uptrend. That is what you need to identify first, the trend direction. So now we look to the major candle, which is now up there, and we're trying to mark the candle. All right, so you mark the candle high. This is the previous day candle. You mark the candle low. Okay, all right, so now the next day candle is what we are looking to trade. That is the zone. Okay, so the zone is what we are going to trade. That is the zone that I've marked out. That is the zone we'll be looking to take the trade entry from there. All right, that is why I've marked out that zone. What you need to do is you scale down to the smaller time frame. This is the daily candle. All right, you need to do this when market open, that is early in the morning. Depending on the time that you are trading, you need to do this early in the morning because you need to spot the accumulation before you see the manipulation. Then you catch the trade from there and then you milk the distribution. So now we scale down to the 15 minutes. All right, so this is the 15-minute zone, and this is the little manipulation that we were seeing on the bigger picture, that is the daily. You know that we had a little manipulation at the top of the daily candle. All right, so this is the previous day candle. This candle right here is the previous day candle. Whatever happened inside this zone is the previous day candle. Okay, so what is going to happen today is what we are looking to trade. All right, that is why we draw the zone there, to know whatever is going to happen for the day, because that is what we're going to trade. All right, so this manipulation right here is the previous day manipulation. We don't need that one. What we are looking for is the new day, what is going to happen. Okay, so that's what we're going to look for. We forward price and let's see what is going to happen. Now we see price open, tap into the zone. All right, tap into the previous day zone. Okay, so price has tapped into the previous day zone. Okay, so we had this tapping around this place. So is this gonna be a manipulation before the distribution? Remember, we are in an uptrend based on the big picture that we just spotted. Okay, so we want price to change character around this place, then we take the buy from there, because this area here could be our manipulation. Now we see price push up again, breaking the high of this area here. Okay, this break this high here. We want to see if it's going to break this high here, and then a little push to the downside will be a trade entry for us to the upside. Now we can see we have a little push to the downside, so we take the trade from here, because this area here is a manipulation into the new day zone. Okay, and when you bring your period separator, you're gonna see that this area here happens during the landing time. That is, this manipulation happened during the landing time. This is the accumulation, okay, that happened during the Asian time. This is the accumulation, the manipulation. Now we are trying to catch the distribution. So my stop loss is going to be below here, and I'm going to target 1:2 somewhere at the top, going to the direction of price. Stop loss is going to be here, and let's see how this trade is going to play for us. Now you see price goes straight to the profit. All right, so backtest this strategy and apply it to your principle. It works best. Price comes back again into our entry. Let's see how this trade is going to play out. You see a massive push to the upside. You can see take profit hits right there. Now you can see our take profit has been hit right here. Now you get it. So this is how to apply this principle of the CRT into your trading. All right, I can go ahead and backtest. Remember, I've backtested and I've seen that it works. Take your trade during the New York section, and also sometimes the landing getting to New York. That is the landing New York overlap. All right, so subscribe to the channel. I'll see you in my next video.